welcome back to the rationalinvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Rational Investors Daily Brief. Actually, interesting. I think the title here on my video, I don't know whether we're doing this right or not. I know I did a video broadcast last night, but yeah, there you go. Chris has got it all set up, and I see a grand total of 2 viewers. It's almost funny. So anyway, here we are. Party on. I don't even know. I'm probably counted as one of the viewers, and Chris is the other one. Anyway, oh, there's D-back. So, all right. Well, it looks like you got one more person. Anyway, I guess we'll just do a quick summary here. Had an interesting morning in futures land. Nothing really set up for me though, so it was more spectating, listening to the Hogue. If anything, the Top Step guys have a TV station now, and it's fun to just sit and listen to Eddie and Hogue again. Been a long time since I heard Eddie. Anyway, so the idea, of course, there is that we're planning on doing a boot camp this November. And anybody who is interested in the boot camp, we have another boot camp meeting coming up here on Saturday. So please express your interest if you are interested in participating. And I think we still have a couple seats left in the 12 that we're going to do like a dirty dozen. Point here is that I told everybody that I was going to do a Top Step combine here, just as sort of a demonstration of best practices kind of idea, what I do with you guys on my own accounts. But, I know a lot of you would like to be sort of prop trading. It's a great way to sort of enter into the industry. And here's a cute little gold trade. I do have a very specific trading plan, though, for Top Step, and specifically that plan, I've basically said that I'm trading crude oil with them. And I just didn't get anything set up cleanly on crude, so I didn't take any trades with them today. But no big deal. Not really in a hurry to do anything. If anything, like I said, I want to be the best demonstrator of best practices, and sometimes it's just a big hurry up and wait. I know in our day trading room, Craig, who's an absolute boss, he was just like, well, there's just nothing setting up. All the people are coming back after the summer break, and so I'm just not going to do anything. And frankly speaking, that's not a bad idea sometimes, just to leave everything alone. You can see my morning routine. I was up actually ridiculously early this morning. I suppose there's no point in even going to sleep. I get up this early. Just kidding. I go to bed at like 9:30, so old man-itis. Anyway, so I was up super early this morning, which is a good thing. And while I'm doing this Top Step combine thing, I definitely want to make sure that I'm up and bright-eyed and bushy-tailed very, very early every morning. Computer's working. Actually, body isn't feeling too bad. The shoulder, I had that frozen shoulder all of last year. It's still a bit sore though, right up top there. Anyway, I suppose I should do some more exercises and all those kind of things. Diet, actually, I gotta say, I'm eating pretty well these days. And actually, I'm finding that I'm actually losing a bit of weight. So if anything, it's a good thing that you track your diet and your sleep schedule and your exercise, and you actually find, hey, I'm actually trimming down a little bit. Now, is that Justin Trudeau hyperinflation? Food prices at the grocery store are ridiculous, and I don't want to spend ridiculous amount of money when I go to the grocery store? That's another conversation for another day. This is 1% induced starvation. Jerks. Anyway, we did have a bunch of econs come out this morning. I always like to start off the conversation with, this is my look first thing in the morning before all the North American econs come out. And interesting to see, Japan actually finished up about a 0.5%. The Asian Hong Kong kind of market here, trying to catch a bit of a bid. The Chinese government is trying to do a whole bunch of sort of half measures to support their market. I don't know how well that's going to go. And frankly speaking, I actually think the whole China story, that's yesterday's news. We want to concentrate on tomorrow's news. What's tomorrow's headline? And frankly speaking, I think China's yesterday's story. So anyway, that's that. Um, and I did notice like stocks. There's one stock that I absolutely love in Japan, Toyota Motor Company, and the goddamn stock just keeps going up and up and up and up and up. And it broke to new highs again today, and I was bitching in the lounge how they just missed me. But anyway, it's a trader's life. That's the way it goes. So the sentiment coming out of Europe is pretty bad. And I don't know whether you listened to Sjord yesterday in the Daily Brief after party. Of course, he's on the ground there in Netherlands, which is, I guess, just next door to Germany. And I have a feeling things are going to get pretty tough for the Europeans over the next, 10, 15 years. They're going to have to go through some sort of, at some point, they got to stop killing each other. I don't know when the hell that's going to happen. And then they have to go through a reconstruction period. It might take a very, very long time for them to actually get back into like the economic engine is running at 100 miles an hour. It's interesting to see that Australia actually declined to raise interest rates, and you can see that their GDP data and stuff is actually still pretty strong. So you might find that if these central banks don't continue to raise rates in these commodity nations, you might find that the currencies start to collapse, which injects a whole bunch more inflationary pressure in their lives. The Aussies refrained from raising interest rates there a week or two ago. And I did notice that the Australian dollar, well, not a week or two ago, a couple of days ago, and I noticed that the Aussie dollar was just getting smoked here. If we just look at the daily price chart, there was the market's reaction by them not raising rates. They just knocked the Aussie down to a new low, and this looks to me like lower highs and lower lows. So I certainly wouldn't be uber bullish of Australian dollars now. And with them actually having a lower short-term interest rate than the Americans, there's no real impetus for people to own Australian dollars here. There's no incentive. And I noticed that the Canadians also refrained from raising interest rates today. That was one of the econs that came out. I think it was this morning. Let's see where we are here. If we well, okay, let's finish off this thought and then we'll get into sort of the real what happened today. So overnight, we've got basically European data very, very weak. I think I saw like mortgage applications. Actually, the last time mortgage applications were this low was like in the mid 1990s. So this entire nonsense of the housing market just being absolute runaway bull, that's all changed. And probably for the next 20 years, we're probably going to see the housing market slowly trickle back down to sort of normalcy with now interest rate, that cycle, the 80-year cycle and interest rates now ending. So anyway, European data very weak. The housing sort of I don't even know what you call it. I mean, they just keep barking about housing supply and now they need more supply, more supply. So I would imagine the house construction business is probably going to be okay. The only issue here is, given that mortgages rates are back to basically normal, and the trend now is higher, do you actually start to see that slowly unwind? We'll see how that goes over time. And then, of course, it would actually be in countries like Canada, Australia. It would be in their best interest that the housing market does break and we end this silly bubble as soon as possible. And that might not even happen for a while. Anyway, we'll see how that goes. So that's sort of the backdrop of sort of starting the day. Was that we had Asia up a little bit on sort of Chinese stimulus, and actually, I think the situation in Japan is actually extremely bullish right now. Situation in Germany and in Europe not so great, and you can see the European indexes not doing very well here today. We got a bit of a mixed bag for North America starting out of the gate. Now we get into the actual econs, what hit today. On the calendar today, of course, we had to start off here, we had imports and exports for the US balance of trade. And interestingly enough, if you believe in the globalization theme, then you want to see this balance of trade keep going more and more and more negative as more and more international countries dump product into the US market at a discount, and that's that race to zero. Their currencies are falling and they just keep exporting, and the US consumer just keeps buying and buying and buying. So to actually see that these balance of trade numbers are actually shrinking, I mean, that's still an absolutely ridiculous number. What this basically says is that about right now, about $700 billion, probably 750 or even more $1 billion annually is leaving the United States of America and going overseas, which, at some point this has to correct. It can't keep going on endlessly forever. And that's probably a big function of, does the United States change its sort of way it operates this whole globalization theme? Does it become more isolationist? Does it depend on local commodities as opposed to importing commodities? And same, and the whole Chinese kind of story. Does it just keep dumping cheap product into the U.S. market? Actually, it's interesting. In the secret options formula meeting we had last night, we did look at the currencies, and I'll tell you, the Asian currencies are looking pretty weak. Whether it be things like the Japanese yen, it still looks like it wants to head lower. And in fact, we were even looking at that here. The US dollar index broke out again to another new high here today. It's interesting that through that JP Morgan speech at Jackson Hole, we were kind of thinking maybe that would be the end of the bull. Nice little dip, and then whoop, nope, sorry, not done yet. We have a 2.618 that looked like it was going to be a brick wall of resistance. We blew through that. So you can see 1.618. This is a alt ABCD target way up top here. And then, of course, if this thing really wants to get going, some 4669s all the way up top. So still higher highs. And the data coming out of the States today actually supports higher interest rates in the States. Because as we sort of move through the day, you notice we have a big red warning. That's in one of these important econs. The Institute for Supply Management Services, PMI, Purchasing Managers Index, I think, came in 54.5. So actually that came in better than expectations. And a reading above 50 means the economy is expanding. So not only is it expanding, it's ticking up. So I remember I've told you repeatedly of late that what the Fed wants is for something to break. And whether it be Europe collapses, or whether it be Asia collapses, or whether it be North America collapses, but something has to break. And you're just not seeing it out of the States. It's just not there. But like, interestingly enough, I was just talking about there a moment ago, the US dollar index keeps surging to new highs, because in the face of that, there's no way that Americans can lower interest rates. I guess the question ultimately is, will they actually think about raising rates? The scuttlebutt that I was hearing today was that the September meeting, everybody's kind of thinking they're going to be on pause. But now they're starting to price in the probability that in the November meeting, the Fed will actually raise rates. So anyway, show me a new high and I'll show you a buy. And really, they started off this conversation with, what do all these other world currencies look like versus the US dollar? And I got to tell you, they don't look good. So there's your euro, and of course, the German data. You know, yes, the ECB is going to raise rates to try and deal with inflation, but we had like data came out yesterday that showed that the I can't remember exactly the name of it, but one of the econs that came out yesterday out of Europe said that it was like at a 14-year low. So if anything, it is Europe that is breaking here, not North America. Um, and then, as I alluded to you there a few minutes ago, does the situation in Asia look any better? And so we look at the Japanese yen, and that also looks like, lower highs and lower lows defines a bear. And of course, this is all on the whole China issue and the Chinese yuan. And, just remember that historically, this is the way the Chinese like to get themselves out of problems is they don't really care about their local populace and they don't really care about Joe Schlub. Um, One of the easiest ways for China to deal with any sort of economic um, weakness, I guess, for lack of a better term, is to just simply devalue their currency. Interesting. I thought we had the chart of it on last night. Oh, no, I don't see it. Interesting. Actually, well, I don't know whether I can do this quickly. I'm a bit surprised I don't have that on here. Chinese, I don't see it. So I don't know, I'll just go China. What is it? Yuan? I don't know if I'm even spelling that correctly or not. I guess that's probably oh, there you go. Offshore Chinese yuan futures traded in Brazil. Oh, that's weird. Wonder where the hell we could get a half decent quote on this. There is this thing. I wonder if that'll work. Let's see what we got there. No, that's nothing. Oh, well, darn. Well, caught myself a little flat-footed here. But anyway, you can see if we just use this as just a line chart, right? Lower highs and lower lows defines a bear. There's nothing really changing there. So if we look at the Japanese yen kind of idea, we can zoom out maybe on like a daily chart. This yen looks very troublesome. And if you start doing fog and bombs off of these levels, it paints some pretty low numbers. And if anything, I like this thinking because I am bullish of Japanese stocks. And if you think about the way that the currency system works, and actually here was David's Japanese yen levels that we did in the meeting last night. Fog and bombs, 2.618, 4669. Oh boy, long way down. We've got fog and bombs off of these highs, 2.618, 4.669. And then the next one after this is 877 all the way down here. We've got bearish AB equals CDs taking us down into, that's probably a bear bot target there. So, any way you shake it, that yen looks really bad. And then, the Australians, they refrained from raising interest rates there the other day. And I said when they didn't raise, all hell broke loose. And actually, you know what they're even talking about now? In Japan, is they're actually talking about doing an economic stimulus package there locally. And we haven't heard. I mean, the Japanese have already diluted the crap out of their currency already. But where the hell are they going to come up with money to do a stimulus program? Oh, they're going to dilute the currency even more. So that would explain this very bearish looking image here for the yen. But it also explains too, on sort of a side note, why this silly thing just keeps powering to new highs. This is the Toyota Motor Company. And my hunch is probably a lot of these Japanese companies that, Toyota actually like does a lot of their business. Like they actually make the cars in the United States. So they don't really have to worry about the currency conversion for local, markets. But they will repatriate profits back to Japan and they will convert the profits from US dollars into, into Japanese yen. And if this thing just keeps heading lower, that's just more and more profits for Toyota Motor Company. So what a surprise! The damn stock just keeps going higher and higher and higher. And of course, you can see there's my order, and I never was filled on the goddamn order. I mean, oh, that's just heartburn. But anyway, like I said, it's a trader's life. Um, so you put it all together, the econs coming out of the States are not weak at all. And if anything, this is scary because the Bank of Canada, of course, they're refrained from raising interest rates. They left interest rates alone. They're lower than the Americans. So, and also, too, I mean, the local economic situation in Canada is just an absolute train wreck right now. And the political situation is a nightmare. So you put it all together, and like, why would you own Canada? I've said repeatedly, Canada is a short. You've heard me say that at least 100 times on this broadcast. So it shouldn't surprise us that they're probably going to knock this Canadian dollar down as well. I think I hear Chris wants to let me know that I'm already talking too much. So anyway, we'll try and wind this up relatively soon. But point here is, what direction is that Canadian dollar going? I mean, that should be pretty obvious until you actually, and it's interesting how they tried to W this thing out and it just got bitch slapped here coming out of that summer holiday. So I don't see any reason to be bullish of the Canadian dollar just yet. Maybe if these W's can start coming in, maybe we be thinking more bullish. But for the time being, just got to let that thing just leave it alone. And as I said there a moment ago, we're actually in the greed part of the cycle. So we actually shouldn't be thinking commodities should be bullish. If anything, we should be bearish of commodities right now. So with that said, I noticed that the gold market is just getting its head handed to it. Now, I think it sold off so much here that maybe a little dead cat bounce day trading wise is not totally outlandish. And like move back to the VWAP kind of idea. That's basically what this little day trade attempt on my part was. Oh, look at that. It's working nicely. So up and away. I get to move my stop at to scratch at 1944.50. But my target is just simply a tag of the VWAP up top here. And I don't think that's outlandish. I wouldn't even be surprised if this is the ultimate target for that trade. This gap right here. But I mean, this was actually quite fortuitous. 5-to-1 risk reward. So anyway, we'll see how that goes. If anything, I want to put an alert on here. So if this does tag this and I'm blabbing away here, I'll at least be notified and move my stop accordingly. There we go. All right. So what else? I suppose we could talk a little bit about Bitcoin. You notice that the breadth indicator on the site, and anybody who's a basic site member, you should be able to see this overview page. So you notice that the ES rolled over negatively here. So it doesn't surprise me to see that the stock market's pretty weak here. And of course, like I said, I'm hearing a lot of anecdotal evidence that, like out of Europe, that's a pretty bad situation there. It is interesting to see that Bitcoin rolled over. I won't talk about algo signals there, but it is interesting if we do have a negative ES, even if you do have a positive crypto breadth, it can be a bit of a tough slog. So, take that under advisement. Of course, we do update in the pro traders or the, what's it called? The pro signals room. We update all the crypto and signals and stuff that is not on this front page. So what I'll just simply say is, as long as the breadth looks down like this on ES, I have a hard time getting too bullish about the stock market. And what I did notice was it was like there was just this huge orgy of buying on this Apple move up here that happened over the past week or so. It didn't really get huge movements and other stuff. I mean, yeah, they moved up. Google moved up. If I understand correctly, I think there's actually a big legal case being floated against Google right now. I think it's in the States, but it might be in another country. I can't remember, but there's some big thing going on with Google right now. But you notice high flying semiconductor stocks coming back down to earth, Amazon even coming back down to earth. And look how Apple is just getting absolute bitch slapped here today. So I think that's actually probably your primary reason why the markets are moving so much is that Apple tried desperately to fill in this gap and just finally ran out of steam. And then the sellers just puked out. Never really did get any follow through on this Meta, so nothing really to get excited about there. Did hear that Netflix was moving up smartly of late too, as well. But nonetheless, um, looking at the major indexes, I was actually quite surprised. This SPY has actually put in a bit of an island top here. Very rare. You don't see that very often on these big indexes. I don't know. I mean, maybe this is a little bit sloppy. It's the ARCA thing. Maybe the NASDAQ issue is a little bit more accurate, but that's an island top, and that in itself is actually a sell signal. So it's interesting how we gap lower. Listen to Johnny Hoagland this morning when he was talking about gap rules are in effect and can the market accept back into previous days range? And right on the retail open, the sellers just came out and they just knocked this thing back down. You can see big old gap here, big gap down here. So there's lots of room just even in the near term for this thing to come off. And what's scary is, I mean, let's just call a spade a spade. They don't call it the fall for nothing. Even if we just had a 50% retracement, right? Not crash, just healthy. Well, that would take us down to 403. That would be 40 points or 10% drop in the stock market here. I wonder if the public is ready for that. So just be forewarned. There's stuff out there that if things start to fall apart, this could get ugly pretty quick. I suppose I'll finish off this broadcast here. We're at about a half an hour, so that's probably good. Still battling at this neckline level here. Remember, this was Peter Fink's ETF low nonsense on the Bitcoin. Wicks and tails like to be eaten. A whole bunch of trap bears there are finally getting released. Then we had this funny wick yet last week, which was a shooting star. And we said that if the shooting star's lows are lost, that becomes a hugely bearish signal. So I don't think we have any major technical damage being done today. You can see we're still within last week's range here. It might be hard to see that on this screen. But I will say on the lower time frames, see over here, there is that low. I would have gotten our rule about trend lines, and I think this is pretty well defined. This was that crazy spike that came out of nowhere, and everybody blamed it on the grayscale SEC ruling. I don't think it had anything to do with that. I think it was a program trade right across the board in the market. And then we just sort of puked out. And notice if we actually are going to puke out here in earnest, A, B, C, D, we could very easily work our way all the way down to this 23,000. And we've talked lots in previous videos and stuff about how we have a whole bunch of higher time frame levels all down in here. So what was interesting about yesterday was that we had bumped up against this trend line, boosh, boosh, boosh. Then we broke it and it was like, all right, can I get a W on the other side of this trend line? And I'll get a buy signal. It is interesting how algos actually turn back up here, but the W just never came in. You could even see that I was, mapping this out and watching this very, very closely. And had we traded up through these highs, that would have been a wicked buy signal, but nope, down. So no W's yet. Would love to see a W come in here, but doesn't have to. And if anything, now we can start drawing uptrend lines off of these lows, boobity boo. And very simply put, if we actually put in an M now below this trend line, that actually becomes a sell signal. So just be forewarned, folks. We're not out of the woods just yet. And of course, they don't call it the fall for nothing. You see the way that the ES and the stock market and stuff is acting. They're not happy over there in stockland at all, right? They're just continuing forging lower highs and lower lows. So My hunch here is that it's going to be a bit of a slog here going forward. Okay, I think that basically summarizes everything that I wanted to talk to you guys about in this free video. Of course, just a couple FYIs. Number one, of course, we have the new school term starting shortly. So, team wants me to just give a quick little plug towards that. New school term starts in a few days. We don't have the raffle open anymore, obviously. It's over. I don't know whether we've actually heard back from the raffle winner. So if we haven't heard back from the raffle winner, let's say by this weekend, that gave them 1 full week to respond. Then maybe we spin the raffle wheel again, and we'll make darn sure that everybody that was supposed to be in that raffle wheel is. I'm not quite sure what happened with all that, but nonetheless, um, and by all means, if you can participate in the program, I would highly encourage you all to consider it. As well, too, Julian, of course, is going to do his daily brief offering tomorrow. And shortly after that, I'm going to appear on Colin and his groups. I think they do a daily video and talk to them a little bit about crypto and what I see going forward. So be sure to keep your eyes open, especially if you're a TRIer, and we'll post all the links and stuff in the lounge. But we should have some fun conversations tomorrow with Colin. Other than that, I think I've covered everything that I wanted to talk to you guys about. And I guess the last thing is interesting. A site member had suggested that this was a stock that he was interested in, and if I might be interested in it. Of course, if I ever see a price chart that looks like that, I'm probably going to be interested. I worked a bid off of this double bottom level, and actually I was reported that yesterday I got my fill. So I went and officially bought Cotter's Guns and Ammo stock. Registered account. Didn't take too big of a bet, but nonetheless, I really like the look of that chart, so I went and bought some. Full disclosure, right, I'm an open book. In fact, I think on my trading spreadsheet, I even mentioned it. We do have a couple interesting spread options trades that came out of last night's meeting. Maybe I'll leave those for Friday, and the after party we'll dig into that and maybe answer. I did see there's a few questions piling up in the DB request room, so maybe check that out. So we'll plan that for Fridays after a party show. Okay, I think I've said my piece. Slow and steady wins the race. Don't take no wooden nickels. Try and play from a position of strength. Don't take too much risk on any one trade. And of course, if you can, see if you can. This was an absolutely beautiful. This is actually a really good example of a what we call an Adam and an Eve setup. And when I saw this W come in, I was like, I got to get in this. So anyway, there you go. Pretty good example of a typical day trade. So, all right, everybody, have yourselves a great day. PMA for the win. Slow and steady wins the race. All the best. Don't take no win nickels, and bye for now.